this is Mario from Trade of the Day. Today, what I want to talk about is what are some of the biggest mistakes new traders, intermediate, even advanced traders make sometimes when trying to find a dip on the market sell-off, which is quite difficult, but there are some indicators that give you a higher probability chance of really finding a dip. And what I'm going to do is also kind of cover the mistakes and also cover what is the right ways and what is the right things to look at to give you a higher probability chance of really catching the dip at the right spot. All right, guys, so let's get started. So you guys can see this is a 1 year chart of the Spiders SPY ETF, which is the S&P 500. You guys can see the last year has been trending nicely, very, very nice. Once the tax cut passed, huge buy-ins in the market. A lot of people got excited and bought a little bit too quickly, and actually we're probably chasing a lot, and that's probably the reason why, most likely is the reason why there was this huge sell-off, especially after some news, because there were still a lot of chasers who got scared when everybody got scared and started selling off. So these type of moves present a lot of opportunity for dip buying. Buying a dip, something very you hear all the time in CNBC or the news is buy the dip, buy the dip. So this definitely gave it a great opportunity to buy the dip. But again, a lot of people make mistakes and made mistakes on this move and bought at the wrong time. So I'm going to cover those mistakes. So first mistake that I see is a lot of traders buy on the moving averages. So for example, 50-day moving average, very, very, very common moving average seen as support. So if you see right here in this move, and when there's a sell-off, huge sell-off right here, it went through the 50-day moving average. So you saw a lot of beginners, even intermediate traders, buying right here, thinking that this 50-day move average is going to hold and then bounce. But guess what? It sold off very, very fast. So that was a mistake for them because it really, really got a lot of people in a bad way, and a lot of people lost a lot of money because of that strategy. So the next thing that I do see is also buying on support. So for example, there was some support level right here. We're in 266.79, which again still sold off. There was another support here at 259.88. This one did hold, bounced up, but then again sold off. So that wasn't it. And the last one that I do see a lot of people that buy, and was in a 200 moving average. Now this one did work, but there's more to it. You know what I mean? So again, the mistakes that people make, they buy moving averages without really paying attention to price action. They buy at support levels, but again, without paying attention to price action. So those two biggest mistakes cost them and cost a lot of people a lot of money. So what should we look for, and what is important to look at? So the most important thing to look at is price action. So you guys can see on the day of the bounce, we got this nice little hammer doji reversal candle, which is very, very nice. And not only did we get it, this reversal candle, but it was in high volume as well. And it was when it was testing some major support levels, which was the 200-day. Now, again, this area could have kept selling, but again, what's very, very important, they really gave the right indication this was a reversal, was a hammer. Why is a hammer important? And I'm going to show you guys why. So I'm going to go back to history using the on-demand tool here, and I'm going to show you why that is important, because when you guys see the price action, you guys are going to see why that's important. Now, when it comes down to reversals, it's all about the price action. What is the price action telling you to give an indication that the reversal is in play? So let's look at it. Let's look at an intraday chart. So right now I'm looking at an intraday chart. I'm going to look at the 1 minute intraday chart, just to make it a little bit easier to look at. So for you guys who haven't really seen this before, kind of make more sense. So let's give it a second for this thing to load up. 1 second. Sometimes when there's so much data, and right now the market is still trading, so when the market is still trading and you're trying to go back in history, it does tend to slow down the software a little bit. So let's give it a second. for this thing to load up. And it should load up in any second. So there you go. Nice. So this is what I'm talking about, guys. And again, look at the daily. You see the circle oval? Now this is the intraday chart. When the market opened, which is 8:30 Central Time to 3:30 p.m. Central Time, that's when the market is open. So I know it's a little bit hard for a newbie to kind of look at, but I'm going to explain to you, why it's important to look for this candle. So what really is happening during this time is that, again, you got all these sellers just selling off in high volume, high volume, just selling off, and you get what you're looking for is this exhaustion sell-off, which we did see right here. If I were to put a little oval shape on the sell-off, actually, let me just move these volume bars up so you guys can see it a little better. And that's not seems to be working. There you go. So what's important to look at is the sell-off, the volume. Again, there was huge sell-off volume on this day, Thursday, day before the Friday, and then so that's an indication right there. You have huge sell-off, like an exhaustion, like a washout, where everybody's trying to push and trying to take out all the weekends, all the people who got scared, they don't know what the hell's going on. They're trying to get them out, at a market. And then the next day, Friday, you get a little bounce, and you get some more sell-off, and then boom, until you get this the lull, and you start seeing green. You start seeing all these dip buyers coming in, huge volumes, and then you start seeing more dip buyers coming in at the close, huge buyers, and then then when you look at the daily chart, you see a reversal playing. You ever see the reversal in play, and that's one of the best indicators, if not the best indicator, of the reversals in play. So again, this takes time to get used to seeing, and over time as you trade, you'll understand price action a little bit better. And again, it's all about price action when it comes down to either swing trading, day trading. Does not matter. Price action is king. So hope you guys learned something. Actually, the other thing that I want to add in is the VIX. That's the other indicator you want to look at. And actually, before I do that, I want to get out of this on-demand tool because it is a little slow. So I don't want that to slow us down here. But the next thing is the VIX, which is the fear index. What does the fear index tell us? Pretty much it tells us, when the fear index hits certain levels, it's telling us that the reason why you get these sellouts is because of fear, which is usually irrational. People are selling off because they're following the herd. They got scared. They saw the people selling, so they're going to sell too, just because. So when there's a market sell-off, the VIX goes up. So as you guys can see. So the last time it hit those levels was actually back in August of 2015. Something related to China. Economic indicators were less than expected, so a lot of people got scared and they sold off. So when the market goes down, the VIX goes up. So you got to look at those tops, And in here, you saw the highs was 53, the 50s areas. And then when you saw that recently, the VIX hitting those 50s areas, and you saw the reversal, meaning that the reversal on the spiders and that S&P was in play. So that's also very, very important indicator to really consider when getting in. So hope you guys learned something from this video. I know it's a little bit complicated. Again, the more you guys learn about trading and continue to trade, the more sense it's going to make. Now, just so you guys know, in terms of what I'm looking at right now in the market, I am looking for another reversal indicator, just because I do see the VIX moving up, and I do see spiders moving down. So I am going to be looking for another hammer type of candle or another type of bullish reversal pattern, candlestick pattern, to really give me the indication that there's going to be another reversal. Now, keep in mind, guys, that the market keeps selling. There's no reason, there's nothing that says that it's not going to sell. But again, it really all depends on what the market feels and what the sentiment is, how do people feel, and that's pretty much it, guys. You can't predict. All you could do have high probability of success when it comes down to trading. You can never be 100% correct. Again, when it comes to trading, it's all about probabilities. All right, guys. Hope you guys learned something. Feel free to follow me on Facebook, Instagram, and DM me or put some comments on this YouTube channel and video, and you'll be hearing from me soon. Have a good one.